Hey there, welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today's episode is all about peeling back the curtain on what really happens when new traders hit the markets. No sugarcoating, no fairy tales, just real stories, honest mistakes, and practical advice for avoiding the traps that take down far too many beginners. If you've ever searched how to start investing for beginners, congratulations, you're already ahead of a lot of people. But if you've spent even a few minutes scrolling through TikTok finance influencers, flashy YouTube thumbnails, or that one friend who turned into a so-called day trader overnight, you know how noisy and confusing it gets. Today, I'm walking you through the biggest mistakes beginner traders make. These aren't abstract concepts. We're talking about real people, real money, and very real lessons learned the hard way. Let's get into it. Let's kick things off with Josh Dot, 24 years old, new to trading, and totally hyped by what he saw on Reddit and Discord. He funded his account with $500 and jumped right in. 7 days later, 47 trades placed. His balance? Down to $182. What went wrong? Overtrading. Josh equated more activity with more progress. But that's not how markets work. Every low price dip made him nervous. Every uptick looked like a breakout. He was reacting, not trading with intention. The lesson? More trades don't mean more profit. They mean more exposure to risk, more fees, and more emotional burnout. The solution is to slow down. Start tracking your trades in a journal. Set a weekly trade limit. Use a demo account to test your approach before risking real money. And platforms like crystalballmarkets.com are great for this. They let you start with small amounts and help you build smart. Now let's talk about Sarah. She's 32, reads the news, sees the headline, Bitcoin hits $40,000. Boom. She takes her emergency fund, yes, her actual emergency savings, and throws it into Bitcoin at $39,800. A few days later, the price crashes 25%. She panics and sells at a loss. That's FOMO, fear of missing out. It's brutal. Sarah wasn't making a rational decision. She was reacting to hype. She didn't know market cycles, didn't have a plan, didn't understand resistance levels. She just didn't want to miss the party. How do you avoid this? Make a watch list and know your entry points before the market takes off. Use limit orders, not market orders. And understand the basics of technical analysis. If crypto's your thing, go check out the beginner-friendly crypto episodes on the Crystal Ball Markets podcast. They break it down without the hype. Now meet Kevin. He loaded up on Tesla, AMC, and a penny stock he found on Twitter. No strategy, no risk control, just momentum and memes. When prices dipped, he panicked and sold everything. Kevin's mistake? No plan. None that he bought assets because they were trending, not because he had a thesis. He didn't know when to exit, didn't know how much to risk, and didn't understand what he was buying. Here's what a basic plan looks like. Why are you entering the trade? What's the logic? How much of your account are you putting into it? When will you exit? What's your stop loss? What's your target? Whether you're day trading or swing trading, define your playbook. If you're not sure how to get started, go back to the Trading for Beginners step-by-step episodes of this show. We've got you covered. Now let's shift to Lisa. She waited 2 full years before investing. Why? Because she thought she needed thousands of dollars to begin. One day, she hears about fractional shares. She buys into an ETF with just $50 and finally starts. The myth she believed? That investing is only for the wealthy. The truth? You can start with $10 or less. Use fractional shares. Buy ETFs. Automate small weekly deposits. Crystal Ball Markets lets you invest tiny amounts with ease, and that lowers the pressure. Now we come to Marco. He's scrolling TikTok and finds an options guru promising quick gains. Marco copies a complex trade involving a strategy he doesn't understand. 2 days later, he's down $800. The guru? Nowhere to be found. What happened? Blind trust. Marco didn't vet the trade, didn't learn the strategy, didn't ask questions. If someone on social media isn't teaching why they're making a trade, run. Follow people who teach, not just flex. At crystalballmarkets.com, The focus is on helping you understand the mechanics, not just copying someone else's play. Then we've got Dana. She held a tech ETF and it dropped 10%. She panicked and sold. 2 weeks later, it rebounded 15%. She missed the entire recovery because fear dictated her actions. Emotional trading is the silent killer. The solution is structure. Set stop losses. Track your emotional state in a journal. Learn to trust your system. You're not going to get every trade right, but with the right mindset, you won't blow up either. If emotions get the better of you, tune into the Stock Market Basics podcast series. We've got episodes that walk you through the mental game, not just the charts. And here's a bonus mistake: ignoring risk management. Let me be blunt, you could have a 70% win rate and still lose money if you ignore risk controls. Never risk more than 1 to 2% of your account on a single trade. Always use a stop loss. Diversify. One bad trade should never end your week or your career. Let's bring this all home. You're not here to gamble. You're here to grow. And growth comes from learning, from being consistent, from staying in the game long enough to get better. So whether you're Googling how to start trading stocks as a beginner, investment basics for first-time investors, or safely invest in crypto beginner, the key isn't speed. It's staying power. All right, your next step? Open a beginner-friendly trading account. Crystalballmarkets.com is built with you in mind. Low entry, clean interface, and tools that grow with you. And if you're ready to keep learning, subscribe to the Crystal Ball Markets podcast. We go deeper on every topic with real stories, practical tips, and tools you can use immediately. That's it for today. I'm Sophia, and this has been Financial Market Insights for Traders. Stay focused, stay humble, and I'll catch you in the next episode.